Hello and welcome back to Toolbox Talks on the Suchhead podcast. My name is Matt Jones and you're joining us today for the very first episode of the series we have titled Finance for Tradies and Contractors. This is a series which is targeted largely towards vehicle and equipment finance, and I'm joined by my co-host Sean from Equipfin, and we're diving into three different episodes. The first one, which we're talking today, is being prepared and asking the right questions. The second episode, which will follow, is called The Reality of Interest Rates. Then the third and final episode in this series is going to be called How to Structure Your Finance. So if you have questions relating to this, guys, by all means, you can head across to the show notes and you can post your questions within the comments there. Likewise, if you're in our community, Sean is also in there, so you can head across to Facebook and join that our private community there. That is thriving and always full of awesome conversations. So jump in there, ask your questions and they'll get answered. Otherwise, if you enjoy this podcast and you got something out of it, please do us a favor, head across to iTunes and leave us a review. Thanking you. Enjoy. The Suchhead podcast is made possible because of Tradie Web Guys, creators of beautiful websites designed specifically for tradies and contractors. If you're tired of dealing with web designers that have no idea about your industry, then head across to tradiewebguys.com.au and reach out. Like many companies from all over the place, you'll be very glad you did.
Giving tradies and contractors around the globe the tools to run a modern business. You're listening to Toolbox Talks from the Suchhead. Now here's your host, Matt Jones.
Hello listeners and welcome to take 3 on the Suchhead podcast. My name is Matt Jones, I'm your host, and you're joined with me today with Mr. Sean Fowler from Equipfin. Sean, welcome to the microphone.
Thanks for having me, Matty.
Yes, that was an interesting set of introductions there that I consistently screwed up. So glad to actually have us live and recording something that we can publish. So for the listeners out there, Sean, I've invited Sean on the show today to talk about finance. And don't tune out. I know that sounds boring, but this is actually spurred from some conversations that are within our community. And so we thought that we would elaborate and get to the bottom of a lot of this stuff for you guys out there, because it is an important part of the business and there are a lot of things that you can do. And I've recently learned a lesson myself when Sean helped me get a loan for a car. So we're going to run through some questions around equipment and around vehicle finance. This series itself is actually called Finance for Tradies and Contractors, and we've broken it into 3 episodes. They're not going to be huge episodes, so make sure that you tune in and take some notes here, because we're going to try and make this as relevant as we possibly can to you guys. The first episode is going to be being prepared and asking the right questions. The second episode is going to be the reality of interest rates, and then we're going to wrap it up with how to structure your finance. So, Sean, first of all, welcome to the microphone. And second of all, maybe just give us a bit of an insight into you and Equipfin.
Right. Thanks, Matt. So Equipfin's a specialist equipment and vehicle finance company. So there's different types of finance brokers out there. You have mortgage brokers and a whole range of people that can do it. Now, we actually specialise in car and equipment financing. So it's all we do. We just do it day in, day out. So we deal with different asset classes, a range of different scenarios and clients, whether it's, your sole traders through to quite large organisations. Everyone's got a need for finance. So, it's fortunately, thanks to technology, we operate throughout Australia as well. So we're not limited to any one place. So that's our specialty. We've been around for about 15 years and we work closely with not only direct clients doing their managing their finance arrangements with its cars, equipment for all sorts of industries. But we also work closely with equipment companies to help them provide a finance solution for their clients.
Brilliant. So, Sean, just respectful of the fact that we have a large audience base that are not on our shores here in Australia, is the content that we're going to be discussing over the next throughout this series, is it for the better part relevant across the board?
Definitely. Yeah. Finance is finance. Whether you're in here, South Africa, the US or the UK, the questions and the concepts and the fundamentals are all the same. So they can all take that and take notes for sure.
Okay, cool. So in the first episode here, Sean, we're talking about being prepared and asking the right questions. Now, I suppose first of all, why have we settled on these 3 topics as the topics for this series. So the first one obviously being prepared, asking the right questions. The second one being the reality of interest rates. Then the last one being how to structure your finance. Why have we settled on this as the three topics that make up this series?
All right. Well, obviously the questions that people ask, that's the first step that when they want to go and search for finance, it's really key to getting it right the first time and getting that structure right. So it's first understanding what's available to you, what should I be asking to get this right finance solution that meets my needs. Mm-hmm. Then we'll get into how it should be structured. And by that, I mean, I'm talking about what terms should I be using? Should I be using a residual? What finance product should I be looking at? And then there's a very general overview about interest rates, because this is a very, very confusing topic, not because of what customers know or don't know. It's a very misleading topic. And so there's a lot of things that people need to understand about interest rates, how they work, how they're quoted, when they apply. It's not a one cap fits all answer when you talk about interest rates.
Yeah.
So we've got to go into what people obviously know is what interest rate am I eligible for?
Yeah.
And people need to understand what decisions go into deciding those interest rates. So when they walk into any type of showroom, they understand, and it's the reality of the interest rate, not about, I saw an ad on TV about a 1% special or whatever. It's understanding the fundamentals behind how the interest rates work and who is eligible for what.
Yeah, okay, cool. All right, sweet as. So let's jump right into that first episode then, I suppose.
Sure.
We're talking about being prepared and asking the right questions. So, I mean, I'm guessing in reality here we're talking to anybody that is potentially looking for finance as an option, or maybe not. Maybe we're looking at people that are in that space of mind where they maybe don't finance things. I mean, I was in that scenario with you only a month ago, and I suppose it'd be good to talk about, similar scenarios to that as well, and why you kind of, from a business perspective, it does sometimes make sense to finance things.
Yeah, well, I mean, maybe we could start on that, and I mean that's not a long conversation. I mean, obviously, when someone goes to buy an asset, they've got a range of ways they can fund that. They might have cash in the bank. They might be talking to their bank. They might have some business facility available. They might have money in a house that they can draw upon. All of those options are feasible. One of the best ones, and this is not because I'm being biased, but finding a good specialist asset finance broker can basically give you all these answers and guide you through these solutions. They have a variety of funding lines available to them to choose that solution, and the good ones will be able to help you structure it and therefore should be able to answer a lot of these questions. But, from having a look at some of the questions that came up on your post about should I use cash or should I finance? And the funny thing is people have historically thought about financing as it being tax effective. Mm-hmm. And the reality is the tax effectiveness is actually the smaller component of why someone should finance.
Okay.
And there's a lot of misunderstandings of why people finance. People think that they finance because they haven't got the money, and that's actually not true. Obviously, it's true in a lot of cases they finance because they haven't got a spare 20 or 30 grand lying around.
Yeah.
But I have some very, very wealthy clients that finance everything. Mm-hmm. And it's all about leverage and management of working capital is the main reason why people should be financing, especially in your small to medium business. We have classic scenarios where we have an excavator operator, small sole trader, and he's had a good couple of months. He's got some money sitting in the bank account. So he goes and buys his excavator outright, drops 50, 60 grand into the thing. Mm-hmm. 3 months later, we get a call back and he says, "Oh, mate, I need to refinance this asset. I had a builder that stiffed me, or I need money for a marketing campaign. I'm down on wages. I had a slow couple of months." And then they've got to try and release equity from this assets. People need to manage their working capital and try and avoid tying up cash into depreciating assets.
Okay.
All you are saving by paying cash for it is some interest, and that interest is tax deductible. So you're better off keeping that cash available for a rainy day. We don't know what's going to happen in the future. Every business goes through ebbs and flows. And if we make that decision to park that capital into an asset, when things get tough, it's not easy to release the equity from that asset. The cars and equipment aren't like houses where you can just simply go and refinance them.
Okay.
It is possible, but if you're forced to do that, the rates that you will pay on an equity release or refinance for an asset are significantly higher than which you would have if you just financed it in the first place.
Yeah, interesting.
So it really boils down to not so much about tax deductions and tax effectiveness of finance. It's about conserving working capital to make sure that you have sufficient funds to manage your business in a long-term basis. I unfortunately have seen a lot of businesses go under. And the main reason businesses go under is not because of poor sales. It's because of poor cash flow management. They sort of think things are good, they go and spend the cash, and then all of a sudden something changes and they start falling behind the 8 ball and it goes under because they can't get out of it because they don't have access to the capital.
Yeah.
And these are quite often the people that have made decisions to park their cash into places that they can't get access to it.
So I imagine we're going to dive a lot more into, structuring the finance and stuff.
Yeah.
Well, into that sort of topic in the third episode. But I suppose in this episode, what I'd like to do is maybe ascertain what the right questions are for people that are, in that space. Okay, maybe I want to upgrade my car. Oh, and actually, that was one of the questions as well. I know Anthony in the group was asking, what's the best way to go about upgrading your car? I think your beard's hitting that mic again, by the way.
Yep, sorry. I'll pull out. Thanks, mate.
He wanted to know, when's the best time to upgrade a car? How do you know when to upgrade a car?
Yep.
From a business perspective. I mean, these sort of questions, I think that are especially relevant to, our audience and, of course, equipment. A lot of these guys, like you say, a lot of them are, they've got heavy machinery and, excavators and bobcats and all that kind of stuff. So even maybe down to things like water jetters and things that aren't so big, but things that, regardless, should be upgraded in order to maintain them, the best and all that kind of carry on.
Yeah, well, I think we can address that one probably we could do a quick review on it, but that really comes into the structure of the finance and understanding your asset classes, and that's a big part of structuring the loan to suit someone's specific requirements.
Perfect. Okay, well, so what are some of the questions that, what are the right questions that people should be asking when they're in that space of considering finance?
Sure. Well, I mean, the funny thing is the questions that people ask every day, unfortunately, are all the wrong questions.
What interest rate can you get me? What interest rate can you get me?
That is the first question. Now, obviously, the interest rate is an important question, but it's actually probably the less important question to begin with, first, which we'll deal with that in the episode around interest rates. But one of the major things and mistakes people make when applying for finance is not fully understanding or getting some feedback from the person that they're dealing with whether this loan is going to be approved or not. We see it far too often where someone approaches a business manager in a dealership or a less or someone in a bank or even a less professional broker that doesn't know their industry that well, that they apply for finance and it gets declined. What people need to understand is what's happening behind the scenes when they apply for finance. So, you got your standard question. Someone's going to come in and say, hey, what are my repayments? Over what term? What are my options? That's all very basic stuff, but it's how we approach it that customers need to take better care when making these inquiries to ensure it's not having an impact behind the scenes.
Yeah.
So the questions that customers really need to be comfortable with after they've dealt with what's it going to cost me, what are my chances that this loan is going to be approved?
Mm-hmm.
And if the person on the other end can't give you some very high level of confidence of approval, then don't apply. Because if you apply and it gets knocked back, there's basically an inquiry that gets hit against your credit file. Every time you apply for finance, there's an inquiry that hits your credit file. Now, the central credit systems are just becoming far more intuitive and intelligent. And there's all these sorts of algorithms that sit behind the back end. So when you make an inquiry, and let's say you may not have even been declined, you just thought, I'll get another better rate, and you make some inquiry on the internet and you apply there. Every time you make an inquiry, it starts to reduce your credit score. And in compact to that, when the banks picks up your credit file and they go, oh, he's just had an inquiry from this bank and this finance company. Every time they see multiple inquiries, they think there's something wrong with the deal.
Right.
So was he not? Because at the moment, the credit files actually don't show if you've been declined or approved. It just shows that, Westpac or a bank has made the inquiry. It doesn't tell you the outcome of that inquiry. So if there's multiple inquiries, the banks are going, what's wrong with this? Why didn't he go to that place, or is he just shopping around? And they're not interested in that business. So if you don't get your application approved on the first or second hit, there's a real strong chance that the banks won't want to touch it from that point on. And people aren't aware that some of these dealers or even brokers are making multiple inquiries trying to get you improved.
Yeah.
So it's not uncommon for someone to come to us and they're like, oh, I've been knocked back at this place and this place. I'm like, to be honest, based on your scenario, I could have got you approved. However, because those inquiries are there now, I don't think I'll be able to, because my guys are going to say, no, I don't want to touch it.
Huh.
So what a good person that's organising your finance, if you're dealing with someone or doing it yourself, you want to make sure that there's a really, really high chance of approval before any submissions are made, because you only have to get it wrong twice and it starts to really impact your ability to do it. And I know it's very tempting to shop around to get the best interest rate, but what they're doing in the process is actually affecting their credit score and their ability to possibly get that finance altogether.
We interrupt this podcast today to talk to you very quickly about Tradie WebGuy's content creation program. That program has been designed specifically for trade-based organizations as a way that you guys as trade business owners can start creating content that enables you to engage better with your customers and your potential customers. It will enable you to build trust and build rapport, because what you're doing is you're investing in educating them. Biggest problem that we see with our customers today is that they're not regularly updating their websites. And that's a problem because, first of all, the search engines are looking for that. And second of all, potential customers are also looking for it. Tradie WebGuy's content creation program has been specifically designed to help you get regular, relevant content on your website consistently every month. We know that it's hard when you're out there on the tools, and we know that sometimes you don't always have the time to be able to do these things yourself. So we're taking it off your hands for you. It's a service that we're offering for you guys. We want to make sure that you're getting this done because we know how important it is. Anyway, head across to tradiewebguys.com.au/content, fill in the form, and one of our representatives will come back to you. It's pretty neglectful in a way, isn't it? Like it's I don't know, it just seems to me like there should be a duty of care there to some extent, but
there should be.
How do you legislate that, I guess?
Definitely. Well, watch the Royal Commission into banking. I think we'll see some changes come out of that. There's we've already seen a couple of major finance companies pull out of the consumer lending market. Because they want to see what's going to happen with the Royal Commission before they decide to go into it. The government's been regulating consumer lending for some time, and I wouldn't be surprised if some of that regulation, and quite rightly, moves into this small business space, because there's a clear definition of what's called consumer finance versus business finance or commercial finance. The consumers, the regulations that sit in consumer finance are really, really tough, and they protect the consumer. Some of those regulatory rules don't apply in the commercial world, and I think some of them should, probably not all of them. I think they've gone too far in some of this consumer regulation, but there is some of it that could easily come into the small business space that would at least protect, your small guys that aren't finance experts. The problem is they put a sole trader who's a one-man operator in the same realm of, say, a publicly listed company who has financial controllers that understand all this stuff.
Right.
There should be some protection for the smaller people that maybe don't understand all of this, or at least better rules to ensure that that they're better informed.
I mean, I'm a little bit ignorant to all this sort of stuff, admittedly. However, I feel like there's a bit of a conflict of interest when you've got, institutions like banks that are effectively banks, and then they're offering you finance solutions. Like, it just seems to me like there's a bit of a
Yeah, well, that's
feeding their own pocket kind of thing.
Yeah, well, that sort of delves into, I guess the opportunity, whether it's a mortgage broker, an insurance broker, a financial planner, people that are in these broking style roles should be offering independent guidance. Now, this is one of the shortcomings of, say, talking to your bank or even the business manager in a dealership about those finance, because they quite often only have one product to offer.
Right.
Now, are you going to walk into Westpac, ask him for the loan on your van? He's not going to turn around to you and say, oh, look, by the way, CBA has a much easier approval process and even a slightly lower rate. So why don't you go across the road and talk to them? They won't. They're going to sell you the product that they have, and they have no other options.
Yeah.
Same in the business managers. They may have one. This is changing a bit. Some of them have more options now. But for the most part, you might walk in to buy a Nissan. Nissan has Nissan Financial Services. And they may not have any options outside of that. That's all they're going to sell. And the reality is, when you go to buy any type of asset, there's a raft of options available.
Yeah.
So if I've only got one to offer, how can I be giving my clients necessarily the best option?
Yeah, I think that's an important lesson across the board, not necessarily with just, vehicle and equipment finance, but I mean, anybody that's so heavily invested, it's the same thing. If you go and, I've been preaching this for years and years, if you're a business owner and you're, beware of specialists is what I've always said, and what I mean by that is if you go and ask, you walk into an SEO agency and what your business really needs is Google AdWords, then you're leaving with SEO. If you walk into a Google AdWords company and what you really need is a better website to improve your conversions, it doesn't matter. You're still leaving with Google AdWords. So at least with, in a broker scenario, you're getting more of a holistic approach and more options across the board. Whereas, and I don't know, maybe you're obviously going to pay for that service, but then what could potentially save you is probably tenfold, and their knowledge as well. You're also paying for that insight. I went through that with you as well. I wouldn't have known that stuff. I probably would have gone, oh, it's cheap interest rate, let's go for that. And it's been shut down as a result. So I'm sure we're going to dive into that a little bit more in the next episode. But so, I suppose as a close then, why don't we talk about maybe a few of the main questions that people should be asking, just so that they can jot them down on a bit of paper, or they can be prepared when they go to, get finance on whatever it is.
Sure. Okay. So, look, after first establishing, whoever they're dealing with on the other end, they should be dealing with someone that can give them the indication of approval. So, there's no reason they can't ask you a series of questions to understand if they have an approval guideline that will fit what is available. Now, if they can't give you any sense of, which you get this in the banks, we'll just submit it and see.
No.
Don't go down that path, because they're the ones where you're just going to get hit with a credit file, and CBA or whoever it is may come back and say, oh, sorry, mate, can't get it approved. Or they ask for something that you can't provide. And you're like, well, I gave you that information. I told you what I could provide. Yeah, and this is where the brokers come in probably handier than, say, the business managers or the dealers, because they know the credit policies. Well, they should. A good one should know the credit policies of multiple institutions. So they ask a series of questions. How long have you been around for? Do you own a house? Is your credit history clear? Have you had finance before? They should be asking a series of questions. Are your financials available? And you start to understand what you've got to work with and go, great, square peg, square hole. We can pop that one over there. And that's all we do. We put people into pigeonholes all day long.
Yeah, okay.
But it's trying to get the right peg into the right hole. And so that's the very first question that they should be asking, saying, look, I just want to, first of all, understand, here's my scenario. This is what I've got available to give you or offer you. Based on this, can you give me a really high certainty that this will be approved? If they're like, oh, look, I won't know until I submit it, or if they're saying it's 50-50, then shop around and find someone that can give you, I'm pretty confident. Now, until we run credit checks, we can never give 100% guarantees, because something might turn up on a credit file that we weren't privy to.
Yeah.
A lot of people have a telco default that they're unaware of. And
exactly
we go,
right.
Did you know you had this? And I had no idea. I moved 6 months ago. I'm like, well, Telstra have given you a default.
I had one of those, actually, a couple of years ago. I had no idea about it, and I went for a loan or something, and they knocked back on that, and I was like, what is he talking about? And I went and checked it, and it was a Foxtel account or something. I've never had Foxtel in my life. And they gave me this credit credit mark or whatever you call it. And and man, it was a rigmarole trying to get them to remove it. I mean, they did eventually because it wasn't. I'd never had that product in my entire life, but man, it was a pain in the ass.
Well, it's all too common a story. You know, people move house, so electricity bills, phone bills, it's all very, very common, and people don't know about it until they go and apply for finance, and we go, oh, by the way, did you know? Anyway, it ends up being resolved, and quite often there's a workaround. But anyway, going backwards, that's why we can never give a guarantee unless we run the credit check. You know, and the unfortunate thing is people sometimes don't tell the full story as well. So whilst I can sit there, gather the information, 9 times out of 10, I can give a very, very high certainty of whether that's going to be approved. You know, a good broker will, even before they make a submission, run the scenarios past credit people to ensure that that will fit their bill, because some are slightly outside the box, and we'll work through and try and find risk mitigants to get these things approved before they're submitted. Now, you apply at a bank, you would apply at the business owner, you apply at a broker that doesn't know what he's doing. They just, I call it a hit and hope. They put it in and hope it's going to be approved without any true understanding if it fits the credit guidelines of where you're submitting it.
Yeah.
And they change daily, the credit policies.
Okay.
There's a lot of change. And so that is the key question. Now, outside of getting all of that, if they sort of sit there and go, great, look, based on that, I'm pretty confident that we won't have any problems. It's then asking the people to help you structure the loans. Now, we'll go into that in the next episode, but hopefully the person you're dealing with understands the finance enough to be able to ask you the questions to guide you through what terms should I have? Should I have a residual? And there's a series of questions which we'll go into, so we're better educated ourselves about that.
And that'll be in the how to structure your finance, will it? Okay.
Yeah, that's correct. But, you know, hopefully those questions can be asked, or the person arranging the finance. You don't get it from a bank 9 times out of 10 because they're not asset finance specialists.
Gotcha.
They know how to provide finance, but they don't understand that a certain asset class might have a better future value than something else. So you can structure the loans differently around how an asset depreciates. You know,
What's your take, Sean, on I mean, I know I've got an account with a company out here called Vader. They do credit check.
Mm-hmm. Yep.
Do you recommend that to people to sign up for those sort of programs?
Yeah, definitely. Well, Vader, it's now called Equifax. They've changed names quite a few times over the years. Equifax have what they call credit alerts that you can sign up for. And in an era of identity fraud, which is rife, it's strongly suggested to get in contact with Equifax, put an alert on your credit file so that if you get hit, you'll know about it and you can get on your front foot. Because if you try to have to rectify defaults that occur on your credit file as a result of identity fraud, it's an absolute nightmare to rectify. And through no fault of your own, you will be fighting credit battles for the next 5 years.
Yep.
Trying to get finance, all because someone stole your identity. And huge recommendation.
So for the listeners out there, what it basically is, and Vader, or as it is called now, Equifax, apparently.
Yeah.
So what happens is, so when Sean got the finance for my company vehicle a little while back, I basically got a notification come through in an email from this company, which is saying, hey, I'm just letting you know that there's been some movement on your credit rating, which means that somebody's basically been in there and checked it. So you know. Now, I knew that was coming because, I mean, I think this program cost me $100 a year or something, but it's very good because it just, I mean, to be honest, I don't really ever apply for finance or anything like that. But when it does come through, it's good to know that it works.
Yeah, and the thing is less about you applying for finance. The reason you want those alerts is to make sure no one else is applying for finance using your name. It's a shame that's not a free service. I think we should be all eligible for that sort of information because it's, we just see it way too much with the amount of fraud and identity theft out there. So it's just purely protecting your own credit file as opposed to being interested when and if you're applying for finance.
All right, brilliant. Okay, well, look, I think we can pretty much wrap this up unless there's anything else you wanted to add.
No, look, I think just in relation to the questions, when people are getting the quotes from the dealers, and we'll go into this in the interest rate conversation in more depth, but when you get your quotes, just deal with the same variables so that you can go and get a comparative quote. Don't worry about interest rates, and I'll explain that in the next episode a couple on. Get your repayments. Understand if those repayments include the fees and charges. So you want to understand a breakdown of all the fees and charges. Are they included into the finance? Get your repayment. Make sure that repayment that you're getting from the person clearly identifies what's the finance amount, what is the residual, what is the term. Because the best way to make a comparison of a quote against something else is understanding the total cost of that option. This is easily calculable. You don't need a fancy finance calculator to figure out the interest rate. Simply you get the repayment, multiply it times the term. If the fees aren't included in it, add the fees in and you get a total cost of what that loan's going to cost you. The option that has the lowest total cost is the one that has the lowest interest rate. So just throw the interest rates out the window because they can be completely misleading, especially in this commercial space.
Yeah.
Look at the repayment and the total cost, just making sure all the variables are exactly the same. The purchase price is the same, the deposit's the same, the residual or balloon, if you've got one, get it in a dollar value, not as a percentage, because that can be misleading.
Yeah.
And you end up with a total cost of loan. And if you sort of want to get a couple of quotes from people, put those totals beside, and the one with the cheapest one is your cheapest one.
Yeah.
And one other question which commonly gets asked, common questions that people do ask and they should, is around early termination of contracts. So when you go into a loan and you want to pay it out early, getting an idea of what the costs are to exit a transaction. Now, in the commercial finance space, pretty much all of them have some form of early termination charge. It's usually in the form of retaining some of the future interest of a loan.
Mm-hmm.
If someone tells you there is no early termination charge, be very wary. Some people say it, but in the commercial space, there is generally some form of early termination charge in there. So just be careful when you hear people spruik no early termination penalties, because it's a bit of wordsmithing. Quite often there is retained interest.
Okay.
If there's retained interest in a loan, then that's a form of penalty, in my opinion.
Brilliant. Red flag. Cool.
Yeah.
All right. So, listeners, for those of you that are interested, you can head across to the show notes for this episode or any one of these series, actually. And there's going to be Sean's left behind a cheat sheet to finding the right finance solution designed for you guys. So you can jump in there, you can grab that, and you can always reach out to Sean as well. You'll be able to, there'll be his contact details also on the show notes there, so you can get to him from that. But I think apart from that, we're going to wrap this one up. So that was the first part of the Finance for Tradies and Contractors series called Being Prepared and Asking the Right Questions. We're going to be coming back in a following episode where we're going to be talking about the reality of interest rates. So, Sean, thanks for your time. And
thanks, Matt. Thanks for having me.
We'll be back next week with the following episode, which is around interest rates. And then to wrap it up, the week after that, we'll be talking about how to structure your finance. So thank you, Sean, and thank you, listeners. Thank you for listening to another episode of Toolbox Talks. If you're liking what you hear, then you can head across to the siteshed.com where you can join our community by signing up to our Toolbox Talks. You'll get sent a weekly notification, which is basically a highlight of everything that we've spoken about during that week, along with any other industry news that may be relevant or specific to the trades. If you're enjoying the show, you can head across to iTunes, Stitcher, or SoundCloud, where you can leave us a review. That would be fantastic, and all the reviews get read out in the show. Likewise, if you have any friends or colleagues that you think would benefit from the show and the episodes that we create, then please go ahead and share it with them.